G'day folks, Jim here from FX Charts, Monday the 31st of March. Thanks for tuning in. It was a pretty scrappy end of the week really. Most currencies finished up pretty much where they started the day on Friday, with the exception of the yen, which weakened a little bit, and that comes right ahead of today's end of Japanese financial year. And then tomorrow, of course, we've got the Japanese tax hikes coming in and the Tenkan. But as I say elsewhere, it was a pretty choppy day. It's going to be a busy week ahead though. We've got the RBA tomorrow, all the manufacturing and services PMIs globally. Then on Thursday, of course, we've got the ECB, and Friday's the US jobs data and non-farm payrolls. So we'll go and have a look at the charts and some possible outcomes for the week. And so starting with the euro, I won't spend too long here. It's chopping around a bit. It's looking a little bit heavy. It's possibly we've got a bit of a top forming here, which you can see on the 4-hour charts now. We've got the ECB coming up on Thursday, as I just said, and later on today, though, we've got the EU CPI data and also German retail sales. If the CPI comes in at lower than 0.6, then I think we'll probably see the euro come off reasonably heavily, at least down to this sort of support down here, which is at sort of 136 and 3/4. The market will start thinking about the possibility of an ECB rate cut. Don't think it's really going to happen, but that's what market thoughts will possibly be. Now the 4-hour charts are actually building some bullish divergence here, so I think we're just going to continue to see some choppy trade. If I'm wrong on that and we do actually head higher, then we're going back towards the sort of 138 high, and it wouldn't really surprise me to see the euro chop around between 137 and 138, really ahead of the ECB. We have to allow for the PMIs tomorrow, the manufacturing PMIs. They could push things around a bit. We've also got the German unemployment data as well as the EU GDP on Thursday, but it'll be the ECB that the market's really looking at. But until then, I think call it 136 and 3/4 to 138. I think should largely cover it. Moving along to dollar yen. Now that's opened up higher. It closed higher. It's opened up around 102.90. It's currently struggling just below 103. Now we've got the end of financial year today, so I'm not sure if we should see some yen repatriation perhaps. So there might be some demand for yen, which will keep 103 probably a little bit toppish. But the 4-hour charts are looking positive. And if we can take out this 103.10 area, then we could head right back up here towards this 103 and 3/4 area where we were a couple of weeks ago. I don't think we're going much above there today. It does look as though the dollar's, actually no, I'll go back to the 4-hour. It looks as though the dollar might be in some kind of converging triangle type formation. So I think myself that's a 103.10 to down to also 102, the low 102s should probably cover it for a while. And as I say, there is a chance we could go up to this 103 and 3/4, which is kind of 61.8% of this move down here as well. But I think there are probably better things to look at. But right now, it does look as though there might be a bit of a push higher. The tax rates that come in tomorrow, there's concern that that's going to cut off any economic progress that the Japanese are currently making, any economic growth. So given that the market's eyeing the possibility of a further BOJ easing, and that'll push the dollar higher as well. So we have to wait and see over the next couple of months, but it does look at the moment as though what the top side might come under a bit of pressure, but the dailies are flat, so I wouldn't be getting too carried away. We are sitting right on this, or just above this 200-day moving average here. It's about 102.65 that is at, so that might continue to act as a magnet for a while. Cable, not an awful lot going on there. Once again, it's a bit the reverse of the euro. It looks as though it's forming a bit of a base. Possibly to head higher. We've got to take out this 166.65 area. If we do that, maybe we head on to 167. But there's not an awful lot of sterling data out this week. We've got the construction PMI on Wednesday, and that's really about it. So cable's looking at it is making slightly newer highs, but the short-term charts aren't really backing up this strength. The 4 hours a bit non-committal. They're positive, but they may be rolling over a bit. So I think we're probably in for some 166, 167 trade for the next couple of days. Dollar Swiss. Likewise, dollar Swiss did get up and broke up to sort of 89, the figure the other day. It hasn't maintained. It's back down at 88.70 today. Now, as long as this rising trend support here holds, that's down around 88.20. Then I think maybe the dollar might move a little bit higher. We could see a move eventually up above 89 to Swiss, 89.40 or 89.35. But that's this descending trend resistance, I think, is probably going to cap it for the time being. So for right now, I think just more choppy trade, but not looking for too much in either direction. The real action is where is the Aussie. Now that's looking interesting. It's had a very good run up, and we're consolidating for the time being. But as long as the support down around here holds, it's down around 92, figure 10, somewhere around there, then I think the Aussie can carry on. We've got this sort of shoulder, head, shoulder. We've broken the neckline. As I say, this is about 92.10. If we come back here below this, then we do need to hold above 91.50, which is the red line here, which is also where the 200-day moving average is on the daily chart. If we go below there, then do not be caught long the Aussie, because I think we're probably heading quickly back to 90 cents. But while we hold this, the measured objective, as you can see on the daily charts, this head and shoulders, the measured objective from the top to the bottom is about 95.90, so that's some way off at this stage. But all the Aussie crosses, and we'll have a look at those in a second, are all looking pretty much the same. So I kind of like that. The one concern is that there's a lot of people also on this trade, so it's fairly weighted to one side. We've got a fair bit of data out this week. As I say, we've got the RBA tomorrow. No changes expected there, but the statement will be closely watched. And also we've got the official and also the HSBC manufacturing PMIs tomorrow, so they'll be in focus. And then it's really looking forward to the non-farm payrolls on Friday, and that'll dictate as to where risk sentiment lies going forward into next week. But right now the trend looks pretty solid to me for the Aussie. It looks okay. And I think it's got further legs both against the dollar and on the crosses, as I'll show in a second. The Kiwi as well. Now the Kiwi's up here. It's this is a weekly chart, and it's basically up at highs that we haven't been to since 2011. Now this high up here is 88.42. We're currently sitting at 86, just under 86.60. Now if we can take out 87 in reasonable fashion. And I'm not sure we're going to do that yet, but the weeklies are positive. The dailies. Let me just get this. The dailies are also looking okay. They're not particularly pointing to any major highs again today. And in fact, I'm sorry about this. The 4 hourlies. The 4 hourlies are actually looking as though they may head a little bit lower. But we've got the support. There's initial support down around this previous high here. That's around sort of 86.30. But as long as it holds sort of 85.80, somewhere around there, then I think we look okay. If we do break that, then we're probably going back to 85.40. That looks somewhere off at the moment. But as I say, the 4 hours are pointing a little bit lower, so we might get a bit of a dip. If so, I think that's probably a buying opportunity for the next leg higher, and eventually to take out 87 cents and a move on to possibly 88 and even that 88.42 high that I just showed you. Now on the crosses, we'll start with the Euro Aussie. Now all the Aussie crosses are pretty much a reflection of what's going on in the Aussie against the US dollar. So here in Euro Aussie, this is a 4 hour chart. We've got a shoulder, head, second shoulder, broken the neckline here, and as long as we stay below that, then and that's currently at, where is it? It's about 149.5. As long as we stay below that, then the measured objective is somewhere down from the top to the bottom, is somewhere down around 141. So there's plenty of room left in this move yet. If we go back above we'll call it 150 the figure, then I'm not sure I'd want to be too short. And certainly if we go back above this downtrend line at 150 3/4, then you certainly want to be out of any short positions, because we could see quite a swift rally higher as stops get taken out. But as long as we stay below this level, and we've got the pivot here around 140, well, it's around 149.5, call it the 50% FIBO. So, and the neckline as well. So as long as it stays below that. Now the 4 hourly charts actually have turned a bit higher, so we could get a bit of a squeeze on the day, but the dailies are pointing quite aggressively lower. We have got support down here in the form of the 200 week moving average, 200 day moving average, I should say, about 147.85. So that's going to support it for the time being. But if we can break below there, then I think the next major level to look for is about 144.5, where this 38.2% FIBO support is. In the shorter term, as I say, it looks as though we could get a bit more of a squeeze higher, but I think that's probably a sell opportunity. The dailies, as I say, are pointing lower, as are the weekly indicators. They're pointing a lot lower as well. So let's just blow that up a bit. So they're broken, and we've got negative momentum all around. So I do think we're probably headed up. Now the other crosses look pretty much the same. Aussie Swiss, for instance, we've got the head and shoulders here. It's finding some resistance up here. It's around 82 and 82.30, 82 and a quarter. Beyond there, the 200-day moving average is at 83.20. Right now, we're sitting here at 82 the figure. We need to hang on above 81 the figure, and most certainly above the 100-day moving average, which is at 80.55. So I think buying dips is the way to go. The dailies are pointing higher, as are the weeklies. But in the meantime, the 4 hour charts just suggest we need to have a bit of a breather and maybe just drift back down towards this level here, down around sort of 80, 81, 10. That's 100 points away. But if we can buy it down there, I think that's probably a reasonable deal with a fairly tight stop just below that. Sterling Aussie looks pretty much the same. If I can find Sterling Aussie, once again, head and shoulders, broken the neckline. That's around 180. It's around about 182 and a half at the moment. So as long as we stay below there, I'm happy to be short. Above 183, I'd want to be out of it, I think. But the measured objective is down towards about 172. So there's plenty of room on the downside. This chart is a bit messy. It's a little bit busy, but so I think this area here, 176 would provide initial support, but selling rallies towards 182. And with the stop loss above 183, looking for 176 and then eventually 172. That's the current game plan. So that's about it. Oh, one other cross I'll just quickly point out that I kind of like the look of. Euro Kiwi looks as though it's heading in the same direction as Euro Aussie, as in lower. It's broken this 61.8% move of this whole run up. It is showing some signs of recovery at the moment. 159.20 is going to be some kind of resistance where down around where this low was here. Above there, we might get up to sort of 160, 161. I wouldn't want to see it above there, I don't think. But I think we're probably headed back down to sort of 156 eventually, and potentially even all the way down here to this 152 and a quarter, which I can show you. Now, let me just go back to the dailies and squeeze that up a bit. So the FIBO support is here, and the trend support comes in here at about 152 and a quarter. And below there we've got the low here of the April 2013 low at around 150, just below 151. So 150.80 that is, or something around there. So I don't think we're possibly headed there quite yet, but I think that is the direction of it. The dailies are headed lower, and the weeklies are looking. I haven't got an awful lot of data, unfortunately, on here, but the weeklies are pointing a little bit lower as well. So I think the downside is probably the way to go. So that's about it today. There's going to be plenty of action this week, as I say. With the RBA tomorrow, the PMIs tomorrow. the ECB, and then of course non-farm payroll. So it's going to be a pretty hectic week. I think there's plenty of trading opportunities. Not so sure against the US dollar, but certainly on the crosses, I think there's plenty of action. And the yen crosses may also be worth a look, although it could be that if dollar yen just peters out and stays within a 102, 103 range, that we may end up going nowhere too far. But certainly the Aussie crosses look as though there's plenty of room for manoeuvre. So that's about it for today. Have a very good one. Talk to you tomorrow.